Looking for a way to close on a home for less money? Well, in today's video, I'm going to review your options for getting help towards those closing costs. Thank you to Jimmy S. for suggesting that we do a video on this topic. So today we're going to discuss 3 ways that you can get money towards your closing costs. First, if you qualify, there are down payment assistance programs available to you here in South Carolina. Now, the exact programs can change depending on when you buy, as there are federal, state, county, municipal, and private down payment grant programs. And some of these have limited funds available or expiration dates. Plus, new programs get introduced on a regular basis. So it's important that you talk to your lender at the time that you're looking to buy to see what's available at that specific time and what you specifically will actually qualify for. Now, keep in mind that most of these programs do have income limits, purchase price caps, and requirements for how long you must occupy the home as your primary residence after you close on the property. Now, if you are approved, some programs will actually allow that money to go towards your down payment, not just the closing costs and prepaid items. A second option, if you are interested in maybe purchasing a new construction home, is that many builders will help you with your closing costs. This closing cost money will be tied to the use of a specific lender that they give you, and many times also require you to use specific closing attorney that they want you to use as well. We have seen recently that you can get up to $12,000 towards your closing costs and maybe more. And you can use this money towards closing costs and prepaid items, and even towards buying down your interest rate. However, you cannot use this money towards your actual down payment. But unlike the assistance programs, this money is not tied to any specific things that you have to do after closing. Once you're closed, that money is yours. If you are not looking for a new construction home and instead you're considering purchasing a resale property, then your third option is to ask the seller to give you money towards your closing costs. And this needs to happen when you put in your offer. And this would be up to the seller if they agree to do this or not. But if they do agree, that money would not be tied to the use of any specific lender or closing attorney. You can use whoever you want. And that money is credited to you at closing, and you don't have any requirements to meet after you move in. Remember, as a rule of thumb, conventional loans will allow the seller to give you up to 3% towards your closing costs, and FHA and VA loans will allow the seller to give you up to 6% towards your closing costs. So for any of these loan types, the lender will not allow the closing cost money given by the seller to be used towards your down payment. So let's quickly wrap up with a pro and cons list of these 3 different options for closing cost money. For the assistance programs, the pros are, in some cases, you can use the money towards your down payment. You could potentially go to closing with little to no money down. The cons are programs change and can have expiration dates and funding limits. So what is available will depend on the timing of your home purchase. There are many requirements you personally have to meet in order to qualify, and there are requirements that the home you're purchasing must meet in order to qualify. Typically, there are requirements even after you close on the home in order to keep the money. For builder closing cost incentives, the pros are you could get most or all of your closing costs covered by the builder. This gives you an opportunity to buy down your interest rate, and the money is yours at closing and isn't tied to any requirements afterward. The cons are the builder can only give you up to 3 or 6% limits of your loan type. You cannot use the money towards your down payment, and you will have to use a specific lender and possible closing attorney that the builder chooses. For seller-paid closing costs, the pros are you could get most or all of your closing costs covered by the seller. You can use this money to buy down your interest rate, and the money is yours at closing and isn't tied to any requirements afterwards. You can use any lender or closing attorney that you want. The cons are the seller can only give you up to the 3 or 6% limits of your loan type. You cannot use the money towards your down payment. Sometimes, to make the deal work, the purchase price will be inflated the same amount as the agreed to seller-paid closing costs, which could cause appraisal issues. We hope this quick overview of the options to get money towards your closing cost was helpful. If so, be so happy for you to leave a like on this video. And if you haven't yet, remember, we release new videos every week that you're not going to want to miss, so be sure to subscribe to our channel.